Welcome back. Still watching Business Incorporated live on Channels Television. Now, to the next conversation, the International Finance Corporation plans to ramp up its new investments in Africa to $10 billion annually, support of businesses that it sees helping to drive economic recovery and growth on the continent. Let's talk to Matt Kindigan now, Practice Lead, Sub-Saharan Africa at Front of You. Great to have you. So why is this announcement, of extra funding so critical for African economies this year?
So this is a very critical announcement and a very positive one, partly because public finances in Africa are under quite considerable strain. So, I think last week we saw Ghana's credit rating being downgraded by Moody's. We were also seeing a deteriorating public financial position in Kenya. South Africa's government is also facing quite considerable fiscal strains. So this additional financing is very positive because it will, to an extent, plug a gap that African governments are facing when it comes to being able to invest. So a lot of African governments were planning to make substantial investments into their economies to improve their competitiveness before COVID-19. But because of the pandemic, they've had to support the economies throughout the disruption caused by COVID. So this extra financing and investment certainly will provide a bit of a buffer for economies that have struggled throughout COVID.
Quite interesting. I see Ghana is actually appealing that downgrade right now. But which industries will benefit the most from the extra IFC funding?
So the IFC will probably target investment into industries that have the biggest impact on generating employment, raising productivity of the workforce, but also improving competitiveness of specific economies in Africa. So this means that industries that will see the most investment will probably be industries like healthcare, agriculture, but also infrastructure. So construction will probably benefit, but specifically infrastructure investment into transport, ICT, as well as housing. So a lot of these industries, especially ICT, financial services, have seen a lot of private sector investment already. So we have seen very positive trends with investment into ICT over the last year or so. But what we have seen with industries like healthcare, education, infrastructure, especially transport infrastructure, is that these industries are very dependent on the state for capital and for financing. So these are likely to be areas that will be targeted specifically by the IFC over the next couple of years.
All right, which countries in Africa are expected to be targets, of this extra investment?
So there's probably going to be a couple of approaches in terms of the countries that are targeted for this extra investment. So certainly the smaller markets, the most indebted markets from a public financial perspective, as well as those with the weakest economic prospects over the next couple of years, will probably benefit the most from additional investment, additional IFC investment. But also those that are specifically struggling to make the adjustments to weaker public finances as a direct result of COVID-19. So a lot of African governments, or a lot of African countries, have quite substantial infrastructure deficits that governments were making fairly substantial progress towards addressing before COVID-19, but they can no longer do this because COVID-19 has really blown a massive hole in their fiscal positions, and their fiscal assumptions from before COVID no longer apply. So governments, so countries with big infrastructure deficits are likely to be a target. But we're also probably going to see the IFC apply its investments in markets where it sees long-term gains for the African continent overall. So, for example, it has suggested that it will be focusing on improving healthcare capacity, but specifically vaccine production capacity. As we've seen throughout COVID, the African continent has been quite vulnerable to supply chain shocks and vaccine nationalism. So it probably wants to address this over the longer term by ensuring that there are improved capacities to produce vaccines locally and other medical devices and products across the African continent.
All right, Matt, but how successful is this extra funding likely to be, in terms of supporting economic growth?
So it will in our view, provide a positive contribution towards economic growth this year and especially over the long term. We really see this extra funding being a really positive driver in the longer term. It will provide a much needed boost to industries and economies that are lacking investment at the moment. And as we've mentioned, specific industries really will benefit. So this will certainly contribute to economic growth, over the next 3 to 5 years. But it's unlikely to be economically transformative in the short term. So although there will be specific industries that will benefit in 2022, 2023, the fact that governments in sub-Saharan Africa and the rest of Africa are facing very significant financial and fiscal pressures does mean that it's unlikely to transform the economic landscape this year or next year. So really, the beneficial focus is more on the longer term.
Right, more of a long term. Well, does this signal a change in the way multilateral institutions will provide support to emerging markets, including those in Africa?
Well, it really reflects a sort of shifting trend amongst multilateral institutions that governments in certain emerging markets, including in Africa, will need additional support over the longer term to manage the fiscal effects of having to adjust to a post-COVID world. So, we have seen organizations like the IMF being much more forthcoming in providing financial support and packages throughout COVID-19 than we were previously expecting. So certainly we are beginning to see possibly a bit of a mindset shift, but it also suggests some more positive long-term thinking in terms of engagement with African economies. So even though fiscal risks in Africa are really elevated at the moment, so they're much higher than they were 2 years ago before COVID-19, we are seeing, like IFC, making a longer-term bet on the region, and despite the fiscal risks, increasing its commitment to these economies that really need additional investment. So our view is that from a long-term perspective, it really is quite positive, but it's too early to tell if this represents a sort of fundamental shift in the way that multilateral institutions engage with Africa. I would hope so, but we'll have to watch this space.
Right, we'll keep watching. You see when the investments start to trickle in. All right, Matt Kinniger, practice leader, Sub-Saharan Africa, in front of you. Always great to talk to you. Thank you so much.
Thanks very much.